I want to stick with the moves Jared walked through there, at least for the energy patch, because we had seen energy, if you look at XLE, up by about 10% over the last month. Maybe no surprise to see a bit of a give back here today. Of course, a lot of people have been watching pricing pressures in energy, not just oil, natural gas as well across the pond there as Europe deals with that. And for more on what we're seeing play out there and what it could spark in terms of more market jitters, I want to bring on our first guest today, Joshua Mahony, IG Senior Market Analyst, joins us right now. And Josh, I mean, earlier in the session, we saw Brent crude push past 83. We're multi-year highs on the oil front. I mean, when we look at maybe some of the pricing pressure there, Brent's up 50% if you back up and look at the year. I mean, how serious maybe is that run that we've heard from a few analysts? It could see that continue for the rest of the year.
Yeah, certainly. I mean, look, the way that we're looking at the back end of this year is that it's going to be mired by issues in terms of logistics, in terms of supply, in terms of labor. Certainly that's notable today. Of course, we've seen the ADP figure coming out to the upside. But certainly I think that what we're looking at the moment is this massive squeeze in terms of energy prices. Most notably, we're seeing nat gas. In actual fact, we saw a massive move towards the upside, building on the gains that we've seen over recent days. And then we saw a pullback falling over 8% as we saw Russia saying that they were going to step in and provide additional natural gas to Europe. Now, there's still big question marks here. I wouldn't necessarily say that we're out of the woods because, of course, the likes of Russia and mainland Europe, not necessarily always the best of friends. So it does feel like they're in the prime position at the moment. We have seen energy pulling back today as a whole, with crude oil also falling back on the idea that, well, if they were going to say they're going to provide additional natural gas, perhaps potentially they'd be willing to also really raise production when we're looking at the OPEC Plus agreements as well. But certainly, I think from my view, the weakness we're seeing across the board at the moment is that we're in a sticky situation. I think we've got strong demand at the moment. That's not necessarily the concern. It's fulfilling that demand. And certainly at the back end of the year, where we're going to see sky high demand in terms of natural gas and people looking to heat their homes and alike, also seeing big tightness in terms of obtaining that. We're seeing massive inflation concerns and the possibility that we're going to see tightening from a monetary policy standpoint coming into play. We're seeing logistical concerns where, especially here in the UK, people aren't able to get petrol to fill up their cars. People aren't able to fill jobs. There's a whole myriad of reasons at the moment to be fearful. And given the fact that we've come so far in terms of the stock markets, I think at the moment there's just a number of things that really are worrying people and making people move out of something like stocks and moving it into, as we've seen George Soros do, into something like cryptos, which ordinarily trades in line with risk. We're not seeing that at the moment. We're seeing cryptos moving higher and stocks moving lower, which ordinarily isn't the case.
Yeah, and I mean, I guess it's kind of interesting here when you're talking about all of those things working in tandem. You know, we heard earlier from OPEC Plus this week saying, look, you know, it's not going to be increased as much as you might hope. And then you got back here in the U.S., a lot of oil producers just not having kind of made the investments to turn it back on the way that they would have. Still about a shortfall of 4 million barrels a day below the pre-COVID numbers we're seeing there. When you talk about that push, though, maybe to kind of escape some of this volatility, I do wonder what the pricing pressure might do for the consumer out there, the strength of the consumer, and how that might maybe, I guess, create a cascade loop the other way. Since we have been detached when we look at stocks versus the underlying economy, consumers held up pretty well. But if you start seeing pricing pressures there on the pocketbook, what that means for earnings moving forward.
Yes, certainly. And the big question, I guess, for investors is who's bearing the brunt of this, right? If we see increased costs of inputs, increased costs of labor, increased costs of transportation to get the goods to you, are you going to pay it as a consumer, or is the business going to pay it? And certainly here in the UK, we have, also in the US, have seen a number of companies warning that their Q4 numbers aren't necessarily going to be great because of all of these pressures. And so certainly there's going to be a significant amount of these companies that are going to bear the brunt of the majority of that rise, and we're going to see lower margins as a result. Certainly here in the UK, and bringing it back to energy, we have seen a number of sort of smaller energy producers actually go out of business because we've seen the government put caps on the amount that they're able to actually charge. And of course, with prices rising, then they're struggling. Now, we don't necessarily have that with the majority of businesses. But the big question mark here is, do the businesses suffer? and the consumers still get a good price? Or do the businesses just say, well, we're going to push this all onto the consumer or a significant chunk of it? And in which case, like you've said, it means that they have a lot less to be able to spend, a lot less to go around. I think the way that we're looking towards Q4, certainly here in the UK, is that we're likely to see bigger sort of dearth of products on the shelves. If you see empty shelves, there's going to be a significant amount of selling and risk aversion around about retail stocks. I think if people can't actually get the goods in, and you're looking at, say, Apple saying that they're not going to be able to fulfill demand, you're likely to see those companies that are really relying on these massive sales around the festive period to suffer as a result.
Yeah, well, I mean, we're watching that closely. We've seen a lot of stories. We've had a lot of chats with port manufacturer, port dealers here, and talking about the backlog. Shelves got to be stocked. Holiday shopping season, rather important. But Joshua Mahony, appreciate you coming on here to chat with us. IG Senior Market Analyst, thanks again for the time to kick us off today.